Alright traders, it is the 6th of June 2017. My name is Jameson. We're looking at a 15-minute vertical bar chart of the S&P that I recently shared here in our private thread. We can appreciate structurally that we have a little stall in prices, so I'm going to say that's the preliminary supply. We have some climactic buying, so I'm just going to say this bar here with increased ease, it's not following through as our buying climax. The automatic reaction is the secondary pullback or the automatic reaction that follows the buying climax. Generally it goes into the preliminary supply. So this is our support line. And then we have a retest, and the secondary test happens to be an upthrust action, which is here. So this this one, we have a stopping action present, and then two, the upper wick here suggests that we're seeing some supply here. So the bias is that we're seeing some distribution present. Following this, we also have a lower close below this level of support. So it's actually a sign of weakness pretty early in the phase here. We rally up higher. We have another upthrust that we covered here in our retrospective market reviews. And then we break down. We find some support here. Not a lot of buyers, I'll add. And then we rally back up in the resistance. There's no buyers. We fade back down. We have a little push. There's no buyers. And then we break down. And the character at which that we break down here with expanding supply is bearish. And then upon the breakdown, we rally back into resistance. Relative to the volume that's here, not a lot of buying. We chop around and we have a nice push on pretty decent volume that's unable to get through here, and then breaks back down on expanding volume. So the simple fact is that we have declining demand on the rallies, expanding supply on the declines, on the down waves. That's characteristic of distribution, which is why I have some bearish price objectives. So measuring the cause, I have a price objective of 242.50, and then if I measure all this cause that's here for the entire few sessions that are available, that'll give us a 242 target. And if we look at these targets relative to the bullish ascending channel that's present, so the first price objective puts us into support, and then the second price objective puts us into an area that would put us oversold relative to the bullish ascending channel. Which would additionally probably put the RSI in oversold territory and put the stochastics here in oversold territory, and increase the odds for some profit taken from shorts, or have some shorts cover and then resume its uptrend and probably retest highs. Why is this important? So the targets that are here, if we look, coincide with the larger trend that's here, and there's nothing wrong with with the pullback that's present. So we can appreciate that the trend's bullish, and pullbacks or trading ranges are just opportunities that get lower risk entries to trade with the trend. So it's nothing but a counter trend. And if we look at the current targets here, the first objective puts us at 242.50, which is the lower trend line of channel B and B. So we might see a bounce there. The second objective is 240. And if you appreciate where 240 is at, it's the trading range that we recently broke out of. So there's the possibility that the markets may pull back and confirm this prior level of resistance as support before we continue higher. We won't really know whether we're going to violate that or not until then. The ideal position would be to have it break down to 237.50 and give longs an opportunity to have a lower risk entry. But you can appreciate, the trend here is defined by the bullish ascending channel, the trend lines, the upper trend line A and the lower trend line A. We're trading right in the middle of the range, and that's just kind of poor form for a bullish entry that's there. On a longer time frame here, because we're looking at a daily vertical bar, we can appreciate that we have a bearish divergence presence in the RSI. We should respect that. The unbalanced volume is pretty neutral here. There is a bearish divergence is present, but we haven't broke down. So I think that what we're seeing on the 15-minute daily vertical bar chart correlates with some levels of support that are present on the daily time frame that traders need to be aware of.